All right, so morning, guys. It is the 2nd of January 2019. Got to get used to saying that now. Happy New Year to everyone. We're doing a quick session this morning to run through the intraday trading strategy that's available for you to download and use and trial, see how you get on with it. It's been an incredibly effective tool that I've been using for some time and developed over a number of months and perhaps even years, but kind of culminated in getting the final product ready to forward test recently. And I've been forward testing this since November. I think it was the 19th of November, so it's just over a month and a half, or coming up to a month and a half. The returns are very, very good, nearly 60% returned on the account so far. And so I'm just going to be doing a series of webinars and tutorials to help people use the strategy to get into and out of trades to maximize their own returns when they're trading. All right, so what you're going to need is Sierra charts to use the tool, and you can get a free copy of that by using some links, which I'll put in the description below for if you're watching this video on YouTube. And just go and click the link, download your trial version of Sierra charts, and then also go and get your copy of the, or do what you need to do to get your copy of the strategy installed directly onto Sierra charts, and I'll be able to do that for you. All right, so that being said, let's move on. Trading financial markets is risky. It involves the risk of losing invested money. You need to be making sure that you're using stop losses and proper risk management and money management at all times on DAX or any other market that you're trading. I'm not providing financial advice. All right, so before we jump into the strategy, just have a quick look on the key levels for this morning. So the DAX opened lower, clearly bearish still on the market. Let's just skip back one screen here. Clearly bearish, series of lower lows, lower highs. Trend defining level right now is 10,680. So until we take that out, the market is still technically bearish. And really what we've got to do, because this low here at 391 could technically look to be a failure point for any further lows. So we've got to see what this current little bullish bounce is going to end up in. I'm currently long at the moment and sort of technically counter trend trading, but I'm happy with that too. All right, so let's jump straight into that key level part. We're running into the value area low at the moment. That is one potential hurdle, obstacle, barrier that I've got. It's the end of the gap, and it's the value area low from last week. What would it have been? Friday, 28th of December? Friday's price action. So I'd like to see that just break through the value area, take out the point of control, and then take out the value area high and just continue to move. But hey, I wouldn't be surprised to see some kind of obstacle around about that 550 level. Okay, so let's jump into the strategy then. So this morning I got off to a very, very good start, and let's just jump on to look at the DAX. I've taken 2 trades from the strategy this morning. I could have had 3, but I didn't take the third. Well, actually, even the 4th. There was another one here. So what you can see in front of you here, if you're new to this, is a series of different colored candles, but it's a 2-minute chart on the DAX. And the overlay that you can see here is just the VWAP, which is the volume weighted average price study, which is the middle line here. And then either side of that, you have the upper and the lower, or the deviation high and the deviation lows. 2 standard deviations away from VWAP. It's not a Bollinger Band, although it might look like one, it isn't. So the different colored candles, I'll start with very first of all. Now, your own charting platform might have a certain color of candle for it being a bullish candle or whether it's a bearish candle. In my case, those neutral candles, if you like, are these ones here, the red and the light blue here. So a red candle is a bearish candle, light blue is bullish candle. Okay, really easy, nothing unusual. Now, if you see a green candle, it's basically telling you that you're in buy mode, as in you're looking for buys. You want buy signals. And if you're in this kind of dark blue or very navy blue color, then it's a sell mode and you're looking for sell signals. Simple as that. And the yellow candles are warning candles for whatever mode you're in, whether it's sell zone or buy, sell mode or buy mode. If you get a yellow candle, basically telling you to maybe start tightening up on your stop losses. When you're moving your stop losses, start tightening up because you've expanded beyond the deviation low or the deviation high. Okay, so that's a crash course in the colors. The arrows are basically just telling you when there's a signal, And the way that I'm trading these is that I wait for the candle to close, because the arrow might start forming while the candle is live, but it's only once the candle is closed that you can tell whether or not you've got a confirmed signal. Once you've got a confirmed signal, trade it. And what I do with the strategy is I put my stop loss behind this dynamic stop loss dot. Okay, it's the super trend stop for anybody who wants to know. And, excuse me, put a stop loss behind that, work out how big the stop loss is in points. So in this case, for example, trade number 195 had a stop loss of 27.4 points. So you work out how big your stop loss is. That enables you to go and work out how many contracts you can buy on your account for you not to go over 1% of your account maximum. So if you lose the trade, you're not going to lose more than 1%. If you want to be more aggressive than that, then that's down to you. If you want to risk 2 or 3 or 4 or 5%, on your head be it, basically. But it's your money, you're an adult, go and do what you got to do. But I don't tend to risk more than 1%. Because you can go on a string of losers with any strategy, and you need to be able to afford that, and it not completely wipe your account out. So for 1% maximum risk. Then the next thing you do, once you've decided how many contracts you can buy to not exceed the 1% on your account, and there's a calculator on the website that will help you do that. If you want to click the link below, if you're on YouTube, then in the description, there'll be a link to the calculator on the website, or use your own version of the same thing. So once you've worked that out and you've decided how many contracts you can buy, you then look for the take profit target of 4 times whatever your stop loss is. All right. So you're looking for 4 to 1 on your trade, and that is you ready to go. Now, as a member, if you are a member and you're in the Intraday channel on Telegram, you'll only get the entry for this particular strategy. There are other signal channels that are a little bit more detailed with stop losses and take profits. But this specific strategy is still in forward testing mode. So I only share the entry for this one. So it's really designed for you if you have the strategy on the system already, or you've got your own money management strategy in place to deal with your stop loss and your take profit. A couple of minutes after I enter the trade, I'll try and send you a screenshot with my stop loss and target. That will help you. But at the very point of trading, it will only automatically send you the entry that I have entered into, because it's connected to my trading account. It just sends the information over. Okay. Right. So that was the basics. And the trade signal I got this morning was straight off the bat. It was as soon as I sat down. Now, luckily for me, I was ready to go for this, and I did get in on it. And I got in at 10 and 485, I think it was. Yeah, 485.50. And the stop loss was 512.90. So that was a 27.4 stop loss points. I worked out how many contracts I could do, and my target was 375.80 for a profit of 109 points. That was what I originally planned. And the next step is to really just manage your stop loss. So as soon as you get into profit, you can start trailing the stop loss behind your dynamic stop loss here. So I decided with this particular trade to just manage it behind the second stop back, or the second shelf back. So if I just go and bring this, actually give me just 1 second, let me tidy this up quick. Move it over here, and then I'll lock the screen, and I'll just shift it all the way over there. There we go. So if we just kind of pretended that we were at the beginning of the day again, and I'll show you what my thinking was. So I got the first signal here. The candle closed. I got in as quickly as I could, and it got me that entry. And as it started to move away, and it was quite fortunate that it ran off quite quickly, which was nice. Normally when I get about 20 points, 10, 15, 20 points, depending on how volatile the market is and how fast it's moving, I'll move the stop loss to break even to just collapse the risk. And when I got this yellow deviation candle here, I did move the stop loss just to protect the trade up to break even. And from there, I thought I'd wait for a second shelf to form. This would have been like my first one, as in a second shelf below where my stop loss already is. This was the first one. I was then looking for a second one. And here I noticed that there was a deviation candle, which kind of made me start thinking, should I manage my stop loss really, really closely, as in start putting it behind the high of the candle rather than looking at the dynamic stop loss dots, just really get it quite close to where it's been trading at the highs on the candle. And I thought I'd wait for 2 consecutive deviation candles in a row to really manage it tightly. And as you can see, it was only 1 in this case, and then it started turning back into just the regular sell mode candles inside the deviation low. So I thought I'd just leave it and just manage it behind the second stop back. When I got the second deviation low warning candle here, I did the same sort of thought process. Should I start managing it really tightly? And again, I just decided not to, just manage it behind the second stop back. And after this one formed here, I thought, okay, well, that's my second shelf back. I can move my stop loss there now. So my stop loss would have been here. And you just let it move away and you start looking at these candles thinking, okay, is there anything to suggest I should be continuing to move? It dropped down again, so the stop loss moves. So my second shelf back is now there. So I'll move it down to that. And you just continue to do the same process. Another deviation warning candle here, and then a second one straight after it. So with 2 consecutive deviation candles, that's when I do start really tightening my stop loss up. So I started moving my stop loss behind this candle, and then I started moving it behind this one. I put my stop loss around about here, which was at the high of that candle, the close, or I think it was the open, the higher of either the open and the close, basically, the high of the body of the candle. So I hit it behind that. And then the next one, unfortunately, took me out. So it wasn't to be. I didn't manage to get my full target out of that trade. But the 2 deviation candles generally tends to provide me with a stronger warning. So I just decided to trail it behind that. Now, in this example, it was good because it bounced quite heavily away from this. And I think maybe I had one more go at it, but it bounced quite heavily away from that zone. So I got out a really good spot. Had I not have done what I did, as in, had I not have got out using this particular methodology, the way I would have got out is to trail the candle behind either the high of the deviation candle, which is another way of doing it, or just really get it close to this dynamic stop loss and wait until the candle closes above it. That might have taken it out with a spike, depending on how tight you were doing it. But this one definitely would have taken me out because it closed above the dynamic stop loss level. All right. So depending on how conservative you are using the strategy rules, that would have been the difference between where you would have got out of the trade. But for me, because of the 2 deviation warnings, I just decided to cut it in a bit tighter. So it was a good start. 3% added to the account on that one. So it's pretty much a 3-to-1 reward trade, which is good. And left me with an opportunity to get into another trade. So this circle here was just me sending out a screenshot to basically say, I wonder what happens when price tags this zone. This is the underside of VWAP. So volume weighted average price, as we talked about already. So I was quite pleased that it kind of got a mini bounce, but didn't really get much reaction. And then we ran straight into this guy here. So we moved out of a neutral zone with my regular candles into green, which is buy mode. And as soon as that candle closed, it was a signal to buy. So I managed to get in as soon as I could. Gave me an entry of 468.70 to get long. So again, same process as before. First thing I need to do is figure out where my stop loss is going to be. Now, I chose that area there because that is what my stop loss was. And you can see this blue number up here, 438. The previous candle was at 427. And so that was where it was down here. So my stop loss was there. And as soon as I opened up this trade, or as soon as I was costing up this trade, I was sort of looking at it thinking, okay, it's 41 points. It's a bit bigger than I'd normally be comfortable with. So I just had to make sure I reduced my contract size down to be able to afford to, not get too caught out if I hit a stop loss, because 40 points for some people can be incredibly expensive. If they're trading futures, mini futures, at €5 a point, 41 points is quite a big trade, and it might be too big for them, unless they've got 20 grand account. It's going to be way over their 1%. But if you're using CFDs or whatever else you're using, then it can still be quite comfortable to be trading that level if you don't have a 5-figure account. So 40 points. I costed it up by looking on the calculator to find out how many contracts I could buy to make sure that if I lost that trade, it wouldn't cost me more than 1%. Then I worked out what my target was going to be. And I was looking at it thinking 164 points. That's asking a lot to move on a day trade for the DAX. But, you never know these things. When you catch momentum on the DAX, it can move, and it does. So I went with it. And it didn't really start that great. I started moving my stop loss up pretty quickly, and I jumped my stop loss into this zone here. It was a second shelf back. That was the plan I decided to take. Second shelf back, and I was thinking to myself, hey, if it goes, it goes. Whatever, it's not really a problem. I got a second signal just afterwards, which sort of builds a little bit of hope that it's not just going to take you out straight away. It took out this previous high, which was great with a spike. It's always nice to see that. And that, I think, was around about a time, well, it might be just after maybe, where I was able to stop just trailing the stop loss behind the second shelf back. And I think I got to break even fairly quickly because I was about 20 points in profit or something like that, 22 points maybe. So I just moved it to break even, didn't think anything of it, and just left it to go. And it started to test these guys here. And normally what I do, if I get the candle closing below the most recent shelf, then you get out of the trade. As soon as the candle closes below the dynamic stop loss, you're out, you're gone. Swap, either reverse your position or just get out of the trade. And in this case, I thought, well, I was a bit further back. It was about here. As soon as I moved my stop loss, excuse me, as soon as I moved my stop loss to break even, I just decided to go and get some breakfast. I thought, yeah, I'll be fine with that. If it takes me out, takes me out. It's not a problem. I had a good trade already this morning, so I was happy to go and get some breakfast. So I missed the fact that it actually flipped here. As in the candle closed below this stop loss, but at the same time, it took out my stop loss at break even. So it was pretty much exactly the same spot. So it didn't matter how you managed the trade, it probably would have been taken out at the same point anyway. But what really was annoying is this, because it just tagged out my stop loss and then it just went to the moon, which happens. It's frustrating. So there was another opportunity here. There's another buy signal there as it popped out of buy mode and then back into buy mode again. So you get another signal here. So you could have got in for a second one and put your stop loss either here. Sorry, it wouldn't have been there. It would have been this one. Stop loss here. And you'd have got in maybe somewhere there. So you're looking at 21 point trade, and then you're looking for 4 to 1 on that guy, which would take you up here somewhere. But I didn't get that trade, so I won't keep that on the screen, but that's what you would have done. Same process as before, 22 points of risk. Calculate how much that's going to cost you if it loses, and make sure that that cost is not more than 1% of your account balance. And then work out your target as 4 times that amount, and then manage your stop loss. Same process every time, always the same process. And this guy here, if you were in this trade, would have continued to see through this zone here. It hasn't closed below the stop loss yet, as you can still see it forming here. The shelf is now horizontal. Popped out of buy mode into neutral, back into buy mode. So there was another signal there. And then we are, well, there you go. Deviation warning candle. I think that's just one deviation warning candle. Can't quite tell whether that's yellow or not, this guy. But again, could start managing your stop loss really tight and just getting it to the first shelf back rather than the second shelf back. And that would have taken you out here. On any way of managing the strategy, that's where you would have got out. And that took us into the 11 o'clock break. So wouldn't be trading this strategy now until probably 1:30, if at all, actually, because I'm not sure whether I'm going to even need to trade this afternoon. I've had a decent morning already. 3% added on the day is good. And I'm already in a long, which I'm still in now. Hopefully you guys are in as well, because I sent it out as a signal earlier on about 9:30 this morning. So, yeah, some good stuff happening today. Some really good stuff. I haven't got much going on with Forex. In fact, I don't think I've got any trades on Forex today. Got a few scouted that I'm ready to pull the trigger on, I think. So they'll probably go out later. I'll share those with you as well. But yeah, that's the DAX. And before we finish up for today, I'm just going to take a quick look in on the FTSE, because you can use this strategy on all of the indices if you want to. Depends on your risk profile. Euro stocks is a bit slow for me. I like something a bit more aggressive than the Euro stocks. It's a bit, yeah, it doesn't really move the way I'd want it to move. So the momentum doesn't really make up for the sort of spreads that I'm paying. So I tend to just use it as a barometer, but I don't actually trade it as often. FTSE is about the slowest that I'm able to really tolerate because it is quite a slow market, but it's fun to trade. And the Dow, well, it just scares the hell out of me. It moves too fast for me, and it's expensive. If you get a few wrong in a day, which is easy to do, yeah, I mean, it's only costing you a couple of %, but depends what contract you're trading on this, because 60, 70 point stop loss isn't unheard of on this, and that can be expensive. And depending on your account size and what contract you're trading, it might not be 1%. You might have to put in more. So let's go and have a look and see FTSE. All right, so similar sort of day really to the DAX, in that we had a huge gap this morning, and then it continued to tank even lower. It didn't provide a sell signal because the sell candle was in the gray zone, which basically just means I'm not trading it. Under normal circumstances, as in if it was in this time of the day, it would have actually been a sell, and that would have been a nice trade, but it wasn't to be. So if I was trading on FTSE, would I have taken that short? Yeah, probably would have. Would I have got any money? Nope, I'd have lost. It would have probably taken me out for a full stop loss. Let's just take a look at it. Let's just zoom out of this guy quick and zoom in. Now, you might think to yourself, well, why would you want to short when you've just had a gap lower and another however many points this is on this collapse lower? Why would you then want to look in for another short? Surely it's extended. And you can think that if you want, but you're then always going to be tarnished by biases. And I just find sometimes the market can remain irrational longer than you can remain solvent. So just because it's tanked doesn't necessarily mean it's going to bounce. You would expect it to, but it doesn't always care about what you expect. It does what it wants to do. So on that basis, I probably would have considered that as it's definitely a valid signal, but I would have considered it as a trade that I might have taken, depending on what other trades I was in, I suppose. So this one, same idea. You would just simply mark it out. You put your stop loss behind the dynamic, and you then are looking for the price of the trade, which is 12 points in this case. Calculate how many contracts you can buy on the FTSE, whether it's futures or not, and it not exceed 1% risk on your account. Then work out what your target's going to be, and you're looking for 4 to 1. And it's just, I know this might sound repetitive for you guys if you are sort of veterans already, but the only way you're going to change your behavior in this sort of way is to continually practice what you're doing. So that would have been the trade. The stop loss would have just been taken out. Simple as that. Just a pure 1%. Fortunately, you'd have been taken out on this candle rather than that one, because that might have incurred some slippage. You never know. But you're out. And then you got into a buy signal here, and that is a clear, valid signal. You've just popped above VWAP. You've held on the top side of VWAP, and then you're jumping into buy mode, and you've got a buy signal. So it's a valid opportunity to get long. Stop loss would go under this guy. You would get in as early as you can. Calculate what your stop loss is. So it's 18 points. Calculate how many contracts you can buy with an 18-point stop loss, i.e. how much is that going to cost your account, and is it less than 1%? And then you look for your reward, which would have been up here. Now, I didn't take either of these trades, so I'm going to remove this in a second. Otherwise, it's going to confuse me when I post these up, and I'll be thinking, well, where's that trade? I can't see that on my account. And but it gives you the idea of how you would mark it up. And as it runs away, this one would have been taken to break even quite comfortably here, because you're way into, it looks like you are, but let me just check. 10 points is what I'm after on FTSE. 10 points is what I'm generally looking for on FTSE to move my stop loss to break even. And this one would have been 24 points. So yeah, comfortably able to move that. And then you would decide what strategy to use to move your stop loss. I would have used my second shelf back, which would have been this guy here, because that's the first shelf back and it's horizontal. All three are the same level. Second shelf back is this one. Or the candle closes below the first shelf back. They're the two areas they're the two conditions I get out of the trade. And that's the guy that would have done it, that one there. All right. So you'd have got out of the trade for however many points that is. It was nowhere near your target, but that happens. Or otherwise you'd just been taken out with this guy here. Another signal here. Again, it's valid. You could argue that you're about to test the previous high and maybe there's resistance, but you can talk yourself out of any trade. You can talk yourself into any trade. What I've started to really get my head around is trying not to be too influenced by your own personal bias, because you can just cause yourself so much trauma. You can talk yourself out of anything or into anything. You can see any pattern on the chart and you can make a case for or against it. So don't do it. Just if you believe that momentum exists on the market that you're trading and you're getting momentum-based signal, then what more do you need? If you believe in the strategy, follow it. Simple. And so I try not to talk myself out of too many ideas. So that one would have been valid. The reason I didn't take it is because I was already in the DAX, and I think I was still in the DAX at this point anyway. So I try not to take on too many positions, because it can be expensive on your account. It can take up too much margin. And so, and with lots of other trades marked up, I want to keep it under control. So that would have been the trade idea there. And then you would just let it run away, move your stop loss to break even. And that would have been the exit right here as it closed below the stop loss. All right. So that would have been the other one, somewhere just above break even. So another small little trade. And then at that point, I'd have probably just walked away. But there was another valid signal here, which probably would have stopped us out. Let's just quickly check in on this one. This is a good example, actually, this one. Before I do that, let me just delete these so they don't confuse me later. I didn't take anything on FTSE today with this strategy. Sorry for running around all over the place on the screen. Hopefully you're still with me. Here we go. So there was a buy. Now, what's confused me here is I can't actually see where the stop loss is, presumably because it's inside the tail of this candle. But it says that it's 66.65. So that would be, let's just move my thing out of the way. Oh, it's down here. Wow. All right. It's actually inside the arrow. Because that's where the stop loss would be, 66.65. So when that candle closes, stop loss would be here. You'd be looking to try and get in as early as you can on that candle. You're looking at about 11 points on that one, maybe a little bit more with the spreads, probably near that, near 12. And you calculate how much that's going to cost your account. If it hits a stop loss, how many contracts can you therefore afford to buy so it doesn't exceed 1%? And then 4 times that would be your take profit target. That would be your trade. And then you would let it run. Now, at this point, you'd be managing your stop loss second shelf back, which would be this guy here. And just about got into profit. So maybe there's a case for saying maybe you wouldn't have moved your stop loss at all. But I tend to do that. As soon as it goes into profit a little bit, I do start managing my stop losses to protect my risk, basically. I mean, 1% is not that expensive, but I'm quite happy to take like 0.6, 0.7% rather than 1% all the time, because that extra 2, 3, 0.2, 0.3, 0.4% that you save adds up. And capital preservation is better than loss of capital. So this would be the spot where you'd be looking at getting ready to press the abort button. And that would be the spot that you'd be taken out. Now, you'd have probably been taken out by this guy anyway, if you would have trailed the stop loss like I would have done. But if you hadn't moved it at all and it was still down here, you would have got out on the close of this candle anyway. So 6 of one, half a dozen of the other. It's pretty much the same thing in this example. And that would be it. So that was the FTSE, and that gives you an idea of how you would use it with some real examples of it. And hopefully that sort of makes sense. So really from the strategy today, I've only taken 2 trades, 2 DAX trades. And I mean, you don't need to take my word for it. I'll show you the chart. Here we go. So this is my FXCM chart. And there are two trades. This is the DAX. It's the 10-minute chart on the DAX. Yeah, nothing more to it than that. This was my first trade here. It was the short. Got 83 points out of it. Points don't mean anything to me. It doesn't mean anything because it's all relative to the size of the contract that I bought. So it was 3 times my stop loss. So that was 3%. Simple as that. And this was the second trade that I took, and it was 0.1 point. So basically, it was break even. I moved my stop loss just a fraction of a point over the entry, but whatever, it's break even. So yeah, don't take my word for it. That's the trading platform right there. But there are plenty of other opportunities, and you can find these yourself. It's really, really easy to do. So before we wrap up now, I'm just going to explain to you how you can get that for yourself. Now, you're going to need Sierra Charts to be able to use the software, because I built it in Sierra Charts using C++, and I haven't been able to build it for NinjaTrader or CTrader, or MetaTrader. No one uses MetaTrader really now, but I suppose it would be the easiest one to build it in. But Sierra Charts is just a much better charting platform than most of them. And so I personally prefer that. I recommend it. I think it's good. I certainly don't work for them. I'm not affiliated with them. It's just a recommendation that I have. Personal preference, call it. So you'll need that, but it does cost money to get Sierra Charts. You have to buy a subscription to it. But before you do that, just trial it. Just go and trial it for free. See if you like it, because you might hate it. But to trial it. So in the description, I'm going to release this video on YouTube. If you're here with me now, the links are not there yet. But I'll put it in the YouTube video. So check that out later and just check the description. And get yourself onto the webpage that I built that will just help you with the instructions, basically, for going and getting a trial version of Sierra and then getting a copy of the strategy set up on your account. And that is what I wanted to go through. So that's it, guys. That is my session for today. I'll have a look at if these sessions are useful. Give me some feedback. Let me know, because they're useful for me, because it helps me work out if I'm using the strategy optimally or not. But if they're useful for you as well, let me know, and I'll run more of them. Yeah, it's good to see you here. Thank you for joining me. I hope you had a really nice Christmas and New Year, and you're pretty much ready to get back in the swing of everything. If you're a member, congratulations for taking the trades this morning. We're doing well. If you're not, but you want to be, then find out more information by going onto the website. Now, I think I've just killed Christmas here, because my charting platform looks like it's logged, closed up. So I'm going to shut this down. Thank you for joining. Have a great trading day. Take care. See you later. Sorry about that, guys. I just got completely cut off there. I've got a feeling that it probably closed me out as I was recording. So sorry about that. But I was really just saying, if you're already a member and you took the trades from earlier on, then congratulations. Let's hope that it goes well. It looks like it's doing all right so far. If you're not a member but you want to know more information, just go and check out the website, thedaxtrader.co.uk, and have a little look around. Send me a message on Telegram or Twitter or wherever else you want to get hold of me. But have a great trading day, and yeah, welcome back for 2019. And I'll catch up with you a bit later on, guys. All right, take care. Thank you, GP. Thank you, Paul. Yeah, no problem, Paul. Thank you, VR.